Hello, and thank you for choosing the Johnston team for your new home purchase. Congratulations on the contract acceptance, and we are so excited to work with you through this process. Wanted to send you just a quick video to have you go through the loan estimate. This is going to be in your loan disclosures, which are in this email of how to get in. And then within those disclosures, just about 3/4 of the way down, this is going to show the meat of all your documents and your numbers. We still need all the other forms signed, but this is the one that most people have the most questions on. So this document replaced the good faith estimate, and if you purchased a home in the past, you may have seen that document before. This is much easier to read, very clear on most of the information, but there's a couple things we just wanted to make sure that you understand where the numbers came from. So up here, we're going to have the date issued, your information, the property address, the sales price of the home, the term of the mortgage, if it's a purchase or refi, that if it's a fixed rate, if you selected that, the type of mortgage. So in this one, we're going to go through an FHA mortgage example, then your loan number, and if your rate's locked or not. We do watch the market to make sure you get the best interest rate available. So this might be yes or no, and that's of course something we're going to just go over with you on an individual basis. The next information down here is going to be the loan amount, your interest rate that you've selected or we've locked in for you or still floating, the principal and interest piece of your mortgage, so this is the part that's not going to change, that you don't have a prepayment penalty or a balloon on your loan, so just a standard 30-year mortgage that doesn't have any of these features. Then the next section is going to show us your monthly payment. So the same principal and interest, plus however much your mortgage insurance is for the loan, and then of course your property taxes and insurance. If on your example or your situation you have HOA dues, you'll see this other box checked and HOA dues listed, and your estimated escrow in the projected payment section versus the estimated taxes, insurance, and assessments will be different. So the estimated taxes, insurance, and assessments will include HOA dues, and the top section will not. That's because your HOA dues are not part of your payment. We want to disclose to you how much they are, but it's something that of course we do not take care of. You pay on your own. The number one question that we get on all of the disclosures is this estimated closing cost. One, it's a little bit less misleading that it's not estimated closing cost to you, and it's not just estimated closing costs. You've also got prepaid expenses for your taxes and insurance in this bucket, and it's a number represented before any credits. So the seller's paying some of these fees. The seller has got tax obligations that they're going to have to cover for you. And then on FHA, you do have an upfront fee that finances into your mortgage that you don't write a check for. So this is a very high number that is not reflective of your true cash to close or your true closing cost, because it's before any of the credits, which we'll go through where these numbers come from on the second page. Also, the estimated closing cost and then the cash to close, we do not add these together. The total estimated cash to close on the bottom line, so in this scenario, $10,323, is everything that this person would need to close on an estimate. We do not add those together. The next page, again, is where we're going to go through how we got to those numbers. So the top section, this one we just estimated that there are processing and underwriting fees only, so we didn't do any points or any credits or any buy down. So this is just a normal mortgage without any of those charges. Sections B and C are going to be the third-party fees that we estimate and get you a pretty close number to, but again, things that we do not charge, but all the other services that we had previously talked about that you need to purchase a home. Then section E kind of continues that up, if I scroll up here enough, for just the recording for the county. And then prepaids are going to be your first year of insurance that you need to pay to your insurance company, and the remaining days in the month that you have an interest. So a lot of the disclosures will have 15 days. It's going to be anywhere between 1 to 30 days, depending on when your closing date is. So we'll go through that with you. If you have not already selected insurance at this point, this is a good point to make sure you go ahead and do that. So we need 1 year of insurance to close. So if your insurance ends up being higher or lower than what our estimates are, that's going to affect your payment and your cash to close. So something we'd like to get situated ASAP to make sure that there's no differences in the monthly obligation for the house and make sure you're comfortable with the figures. The next section is going to be the money that we're going to put in your escrow account for taxes and insurance. So in this example, as you see, the 3 months of insurance, just like we've gone over before, so that's pretty standard of what you're expecting to see. But then you see a 5-month property tax collection. Why that is when we get to this point, we have an exact closing date. You need to come up with about 3 months, but we need some money from the sellers for the portion of the year that they've owned the home. So up here, we've got 5 months of property taxes collected, or the 926. But if we scroll down to the section that's adjustments and other credits, there's a portion of money that the seller owes the buyer for property taxes for their portion of the year. Now, why this one is a little bit lower is the seller has some exemptions on the home, but generally, of course, you're going to have a net about 5 months, or 3 months, excuse me, between those two of what you need. So again, the number up here, less the adjustments and credits, going to come up with what your property tax obligation is for you. This number in escrow account is also generally a little bit high. At this point, we have some pad fees in here. We just don't want to be underestimated. So usually it comes down a little bit by the time we get to your final loan documents. Then the rest of the title insurance, we break it up into 2 sections, Section C and Section H. So that's the rest of that amount. So as you see, when we get all this together, we get back to that $10,368 figure we saw on other items. But of course, we still need to subtract the credits. So in the bottom category, or the bottom section here, we're going to be able to go through that. So it's got the $10,368 pulled down. Then one thing that makes no sense here is the down payment funds from the borrower. So your down payment on this scenario is 3.5%. Well, 3.5% is a lot more than $2,835. Why that is on the FHA loan is this is a representation of your down payment less the upfront mortgage insurance that you pay to FHA, because it rolls in the loan. So a little bit confusing, but again, it's going to be the 3.5% down less the 2624 in this example from Section B that you're financing in as part of what FHA allows you to. It's the subtraction of those and then pulls over here. So again, something you would never know unless we tell you that. Then you've got your deposit, so your earnest and option. So this is now going to be a reflection of what you put up as credits, so a little bit less that you'll need at the closing table. Then the seller credit. So the seller's actually paying a portion in this scenario of title insurance versus the whole thing. So normally the seller credits will be the whole title policy. So this would be $1,000 in seller credits over here that the seller would pay for the title insurance. So most of the time that'll match. This is also where the survey will pull over. So if they're paying for the title insurance and the survey, in this scenario, that seller credits bucket would say $1,600 instead of this $1,000 here. So then that's how we get to the total cash to close at the bottom of the $10,323 in this scenario. So if you have any questions on what your loan disclosure, or if this any clarification items, we hope that this helped explain where all these numbers are coming from. And again, we're very excited to help you with this process and get you in your new home. Talk to you soon.